Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is December 22nd, 2014, and today is Monday morning. So looking at the economic calendar for the week, not much going on. Essentially, some USD existing home sales today, later on at 5 o'clock South African time. And then later on in the week, we've got a couple of numbers coming out of the US and the UK. But everything is pretty much the end of the year. So we're heading over to Christmas later on in the week. So that's going to affect the trading schedule also for some of the symbols on the system. So have an eye out for our trading schedule that's coming out. It's a mailer that's going to go out probably later today with how the symbols are going to be affected because of the markets being closed because of Christmas and New Year's. So looking at the markets just last week, we missed a couple of days of daily reviews last week, but definitely was on target. Okay, we had discussed this was the Euro USD and a 4-hour chart. Let's look at that. We saw that it was trading in this range, and it finally broke. Tried to break it on the top side, never broke it. Okay, and I always said, if you're down here between these two levels, you can trade the range. And finally, we broke it right here on the downside, and we made new lows for the year. So really a great trade. Okay, if you were in it, we had discussed this multiple times that you had this really a lot of opportunity here, especially here and especially here, to really short it and to cover it into the sell-off. And as you can see here, we're making new lows for the year below 122.50. We're just about that level right now, but really we are completely at new lows here where we hit 22.25. Now going into the end of the year, there's sometimes a rally, so you got to be careful what's going to happen going into the end of the year. There's going to be short covering. So even though it's a breach of the support level, we still have 121 to go. So the downside isn't huge. Okay, the downside potential isn't huge, and I think that that's more correct to say. It could go down to 121. Obviously, it could go down on a longer term to 100 and 110, obviously, but I'm not talking about that. I'm just talking about on the short term. On the short term, we're talking about 121 as a potential support level for the Euro USD. So really a great trade. Okay, as we saw this really fall apart in the past 5-6 months from 137 to 122.5. So I'd keep an eye on it for later in the week. Okay, let's see if there's a little bit of a rally for the euro going into the end of the year, but definitely something to keep your eye out. Looking at the USD Japanese yen, we rallied right back. Let's look at a 4-hour chart. We're not on the highs of 121, but we did rally right back after really taking a nice sell-off into the 115, 116 level. So we're almost in the middle of the range. Let's see if the USD is going to rally into the end of the year and try to close above this 120 level, which is, on a mental note, is a very big number for the USD Japanese yen. Looking at the GBP USD, really dead in the water, trading between this range. So if you want to just trade the range, you can. It's a little bit of a tight range right here, 157.53 to 156, about 150 pip range. But if you play it small and you really time it well by buying and having a trigger buy at like 155.60 and then a sell at 157.40, I think you could make some money out of there. Looking at some of the other GBP Japanese yen, also rallying right back. We're looking at a weekly chart right here, but we had this big sell-off going down to 181, and now we're back at 186. So we're pretty much equal between the the USD Japanese yen and the GBP Japanese yen. One thing's for sure, the Japanese yen is weak. Okay, that's what this graph tells you. So let's keep an eye out to see if it's going to rally into the end of the year. Maybe we'll hit 190 going into the end of the year. It'll be a nice note for the GBP Japanese yen. looking at gold. Gold's been trading a little bit on the sideways. I mean, we had this big sell-off before at the end of October, at the beginning of November. We had this rally going into November, and now in December we're kind of selling off between 1240, and now we're hovering at just at about below 1200. So it's not a big trend. It's not trading in a range. It's bouncing. It's a little bit all over the place. Not a pretty trade, but had you timed it well with the 1250, 1240, I would have said 1250 would have been a much better spot to short it, but you see it didn't hit that level yet. So sometimes you miss it. Okay, this is a case in point, because sometimes it gets ahead of you. So there are other things to watch in the meantime. I would say a support level is 1190. So if it does dip under 1190, you could trigger a buy, cover it at 1186. But if it does break this 1185, we could see it testing the 1150, 1155 level. So it's a little bit of a harder trade because it's not trending. But there is some juice in it, and there is some momentum in the gold, obviously. Looking at the Dow Jones, you see, this is why you'd rather trade something that has character like this, like the Dow Jones, where you see that it's coming in a little bit, and then it sold off very hard, okay, earlier in the month from 17,950 to 17,100. That's 800 points sell-off. I didn't expect this, honestly. I was expecting to level off and then carry into the end of the year, but momentum is momentum, and people are booking their profits before the end of the year. People are going shopping, they're selling their stocks or what have you. But then look what happened. Last week, and I kept on saying this, when we were over here, I kept on saying we're going to hit 18,000, we're going to hit 18,000 before the end of the year. You'll see, mark my words. And we sold off. And then, I kind of had to eat my words over here, because I got to the point I said, listen, at 17,100, how possibly could we got to make like 400 points per day in order to get back to the 18,000 level before the end of the year. So Fred had kind of a big task at hand in order to, and I spoke to my boys, and look at what happened. The market goes up. Okay, I'm just kidding. The market went up anyway, but you see that the market is strong. You see that it's resilient. You see that it wants to go up, and now this 18,000 is almost a reality. Okay, if we just rally another 200 points into the end of the year, we hit 18,000. That's a nice note, and obviously to be expected when we're at these levels. People are booking their profits. There is volatility in the market. So this is a healthy bullish market. Okay, when you have these sell-offs, it's a healthy bullish market. I've seen it before, and we'll expect it to see it going into the beginning of next year and rallying into the second quarter of next year. Okay, at which point we can discuss where I think the markets will go going forward. But in terms of short-term trading, definitely a very strong equity to buy, definitely very strong index to buy, excuse me. And you see here, on a weekly chart, it kind of hit support, okay, previous resistance, and made this support. So moving forward, 17,000, I would say 17,290, 17,300 is a major number for the Dow Jones as a future support level. Okay, so if that gets breached somewhere over here after hitting 18,000, and looking at it now, 18,500, 19,000 is even realistic for next year. We'll see. Okay, but definitely on the radar. Looking at oil, also really a great trade. Tested these lows again at 54, didn't breach it, and jumped to 58. Now we're at the top of the range, and we look like we're consolidating and then making a wedge formation. Maybe this thing will pop up above to hit 59.60 even before the end of the year, but definitely trading. So I definitely keep an eye on oil to see how it's going to unfold. Are we going to just break apart here just like we did here and here, or are we going to breach this resistance level and go back to the $59.60 level? That should unfold itself this week. Let's keep an eye on it. It looks like it's consolidating a little bit more. Remember, it's almost half of what it was over the summer. Okay, it's 106. It's now at 54. So it's really, you know, just talking, not even understanding the commodity side of it. It's a tremendous sell-off for oil. And just looking at from a perspective of just any instrument, it's a 50% sell-off. And we understand that, you know, if we understand the commodity a little bit better, we understand that it's the most used commodity in the world, and it's a staple for every country and every society. So, you know, it stands to say that at one point this thing is going to go up again. It's just a matter of when. Okay, and we see that, you know, that the oil-producing countries are not backing down on their on some of their explorations, and they're still investing money in it. So, you know, it just seems like this is momentarily to squeeze Russia out. Listen, this is just my perspective of it. You could take it as you will, but definitely keep an eye on it because it's going to still continue to be in play. This is Fred Razak. I want to wish you guys a great trading day. Thanks.